Most economists are really pleading for patience when it comes to the CPI print. We do need more data going ahead, and it doesn't necessarily mean, of course, that the Fed is going to veer off track. And in fact, it's repeatedly said that it will continue on its hiking path. So what does that mean for the US dollar? Does that mean that potentially there is further upside? Because it has been pretty range bound, and as we can see in this chart, has broken through that 50 DMA.
Yeah, yesterday, July CPI report out of the US was certainly a good one, and of course, welcomed by global markets with the US dollar sinking across all the major currencies. But I think what the FOMC cares about is a sustained deceleration in the underlying inflation. So yesterday's data, of course, is a good one. Nonetheless, we still need to see a couple of more monthly decreases in underlying inflation before the FOMC can start to think about pausing its tightening cycle. So what it means for the US dollar, in my view, is that the US dollar can firm up a little bit more. I think the market currently is still underestimating US inflation and how sticky it will be over the medium term. And while markets have pared back expectations for the FOMC Fed funds hikes over the near term, now markets are pricing a lower odds of a 75 basis point hike for the September meeting. I think markets will later realize that the FOMC will need to do more to bring inflation back to target, and it will, of course, support the US dollar.
What about support for the Aussie dollar? Because we see that risk on trade really benefiting the Aussie. Does that have more to run?
Yes, so for the Aussie dollar, it really benefited from a weaker US dollar and stronger commodity prices overnight. And we have obviously seen the Aussie dollar recovered a little bit to a 2-month high overnight. And I think over the near term, the Aussie still is vulnerable to the downside, just because Aussie is very sensitive to changes in the world economic outlook. And given the darkening global growth outlook with rising interest rates across the globe, I think Aussie can fall a little bit back and towards 68 US cents later.
Carol, talking about darkening economic outlooks, I mean, Europe is facing a pretty challenging time. We saw that boost on the euro because of dollar weakness, but how long will this last?
Yes, so the euro dollar and the European economy are really facing numerous headwinds at the moment. While it has recovered just because of the weaker US dollar overnight, I'm still pretty bearish on the euro dollar. The European economy is still facing the energy crisis, and I think chances are that the euro dollar will fall back below parity sooner rather than later, and more than just briefly in the near term.
Let's talk a little bit about rate differentials, because of course we have the ECB now sort of following what the Federal Reserve is doing, but one central bank that's really not going anywhere near is the PBOC. And we have seen, inflation accelerating a little bit, but still pretty benign as compared to the rest of the world. Where does that set us up for the offshore yuan?
So yesterday we did get the July CPI report in China, and unlike the US CPI report overnight, headline inflation in China actually picked up, and core inflation did ease a little bit. But overall, inflation in China, in terms of the underlying terms, is still pretty benign, as you said. And I think over the medium term, it will still be pretty subdued because of the COVID lockdown restrictions, and those will continue to suppress consumer demand in China and keep underlying inflation pressures pretty weak in China. So what that means for monetary policy in China is that the PBOC will keep interest rates steady and keep its easy monetary policy stance over the medium term. We've actually heard the PBOC come out yesterday and say that it prefers to keep monetary policy steady and supportive of the economy. And of course, that will mean US-China monetary policy outlooks will continue to diverge, and that will be supportive of a higher dollar yuan. But like dollar CNH is actually holding up pretty well recently, and it does not break down below IDAS, and I think that's because of the very strong trade surplus in China that we got over the weekend. But I think it is just a matter of time before dollar CNH breaking higher.